He has handled an assignments as IRP and RP for various companies, which include Raj Oil Mills Limited, Sunshine Housing and Infrastructure Private Limited, Mayurpunk Fine Builders Private Limited. He is also handled on the buy side advisory under the IBC successfully. He is an faculty of finance and accounting in Indian IIM Trichy. He's also trainer in project finance and financial modeling with MS Excel. In the past, he has been managing director and the CEO of India SME Asset Reconstruction Company Limited. Or prior to that, 8 years he has been in corporate sector in top management positions. For example, he was, CFO and a director of one of the group companies of Hisar Steel Limited, which is Azira Plate Limited. He was a CEO of Brahmani River Pallets Limited. He was a group director of Abhijit Group. He was a group executive director of SKL Infrastructure Limited. He was a general manager of IDBI Bank now, IDBI Bank, and prior to that, he was working as an engineer for 5 years. He has been into training and teaching since long. In fact, he has been a faculty for MBA course in NMIMS University for Project Finance. He has been a visiting faculty for IIM Indore, Sambalpur, Trichy. He also is handling courses titles, Excellence in SME Lending for Nigerian Exim Bank at Nigeria. Apart from that, he is very active in most of workshop in venture capital organized by a Center of Financial Engineering and Development at USA. He has attended again a 12-day course in building knowledge and equities in infrastructure finance in USA. He has done many such kind of projects and has been eager to learn more day in day out. With this, not wasting much time, I would really request, first of all, thank Mr. Ganatra to be and agree to join us, and I would now hand and ask him to take over. Mr. Ganatra ji.
Since we are a lot of participants, we request you all that we will be taking all the hands which are raised, but at the same time, better if the questions are raised through the Q&A. Paras can just enlighten on that.
So there is a Q&A box you might be seeing on your screen. You can type in your questions on the Q&A box, and if time permits, we will answer each and every Q&A which has been raised in that box. Apart from that, there is an option of raising hands. You may see an icon. This option needs to be exercised in case you want to speak to the speaker today. So we will allow you will unmute your mic and allow you to speak, wherein you can directly ask these questions to the speaker. With this, I would request Mr. Ganatra ji to take over. I'm not able to see Mr. Ganatra online. Can you please check?
I'll start. I'll just start. Yeah.
Sir, can you start?
Are you able to hear me? Welcome,
yes,
everybody.
Sir, we are able to hear you.
Yes, sir. Yes, sir. Please go ahead.
Yeah. I think before the internet bothers us, I'll get started. First, I welcome everybody. I just want to know whether you are able to see the PPT file which I have shared. Are you able to see?
No, you will have to start sharing again because I think you were disconnected.
I'll do that. I'll do that. Let me just go to the share screen. Here you are. Share. Are you able to see now? Are you able to see?
It's starting.
Yes,
it is starting. Yes, it started now.
Okay. I want everybody to see the prologue. I mentioned here the objective of this presentation is to highlight the dire need for adoption of transparent and speedy process for resolution of distressed assets as an important component of the numerous steps which would be needed to rejuvenate the economy past COVID-19. This need has existed for many decades now, and I'm saying this from my own experience, but COVID-19 has made it necessary to fix, among others, the NPA malaise now, lest the country face economic down. The attempt would be to summarize the conclusions so that these can be raised with the PM, the Ministry of Finance, and IBBI for resolute steps. And what I'm trying to do is, I would like to impress upon you all certain points. You might be aware of some, you might not be aware of some others, and in some you might be, better equipped. We need to take this up through that are connected with. Take up something is done because we cannot, the country cannot be half-hearted anymore. Let me get started now. Well, I have divided this presentation into just 5 points. To COVID-19 lockdown, the impact on India. We are all aware of it. So I'm not going to tell you something which you're very aware of it, but I'm going to emphasize some points here. Sir. NPA, the need for speedy resolution. Again, this has also existed, but I'm going to make some additional point with figures, because unless we speak figures, we can't make points. The recent regulatory changes, whether they help us at all, the way forward, the CIRP and pre-PAX, I'm going to talk about pre-PAX, which I have studied as a part of my general study internationally on the bankruptcy codes. Why pre-PAX? The SME solutions, why pre-PAX? After all, why SME? Out of the MSME. And ultimately the conclusions, we may add a few more things, of course, which you might mention, and which I'll keep. I am also going to raise issues through the different fora.
Mr. Ganatra?
Yeah, please.
Sir, if you can just remove the background.
Pardon?
Can you remove the background, the CTC background?
Okay. This video which I'm having, is it okay? Which background? Okay, okay.
If you can dispense with the background.
The CTC
the virtual background, sir. You just select none.
All right, I'll remove this. Let me just go back. Let me just see this. How to go about it now. Let me just check it out. Here we are. Let me just see how we can do it. Yeah, video settings.
The option is next to that stop video, the arrow.
Is that all right?
Yeah, that's all right.
That was good. Yeah. All right. Okay. Yeah. Okay. So we go back here to the presentation.
Yes, sir.
Yeah. All right. So let me get started right away. Just look at the gross value added. We have a gross value added which has been just languishing, I'm using gross value added, of course. This is the GDP is derivative of that. We are all aware of it. It has been, in fact, limping. 2011-12, it was, quite steady. It wasn't growing much. Then there was some minor growth for the next 3 years. And then there have been some growth, but it has not been very great. And with the lockdown extended to May 13th, in the current year, of course, 2019-20, it could be, in fact, a flat trajectory. And if you look at the percentage growth, 2019-20, it's annualized 1.71%, which is very, very less. We are a 3.5 trillion economy, GDP, and we are hoping to be 5 trillion. But right now, with the lockdown extended, we might be shaving off 20% of the GDP. At least the 2020-21, there is going to be a substantial fall. I don't think growth is going to be possible. If once, quarter suffers because of disruptions, going forward, it's going to be difficult to recoup. So there is going to be a problem. Now, we are all aware of it. What does it mean? Let's look at some figures. We've had estimate of revenue receipts. The budget estimates was substantially higher. 10.8% was going to be the increase in the revenue receipts for the budget. And of this budget, 44.4% was the tax collection. And if you look at the capital receipt, we had capital receipt which was supposed to grow by about 10%, and the capital expenditure was supposed to grow about 9%, and the net debt as a part of the capital receipts was 69%. Now, what does it mean here? It only shows that our budget, our national figures depended very critically on increased tax collections. The allocation for the capital expenditure, which is real multiplier, was less. The government's net borrowings also constituted high percentage of capital receipts. Now, the trouble is that with the tax receipts going down, the economy is going to be in doldrums, and which means that we are not going to have any significant, elbow room for the COVID, 1.75 lakh crore package for the poor, but somehow the government will have to make it. I do not know the accounting details of it, but it's going to be tough for the government. So there is no elbow room for the government to meet the cost of this COVID package. There is no elbow room really for the fiscal stimulus. And therefore, we are all aware of the rupee. Rupee today stands at over 76 rupees to a dollar. So, where are we headed for in the year 2021? And if you look at, so let's look at the sectors of the economy which form, part of our gross value added calculations or the gross domestic product calculations. We have GMDC, NMDC, MOIL, etc. They are at historic lows. In fact, we are all investors and we try to look at figures. And though we have bought at a much higher price, today at this price, there is a fear whether they'll go further down. Manufacturing, all the sectors from metals to products and appliances have been facing slump and are standstill now. And they've now been very badly impacted because of the COVID lockdown. Power generation is with 60.35% PLF, is in fact improved a little bit over the past. But the IPPs are distressed due to the bankrupt Discom and unfortunately failure of the Ujjwal Discom Assurance Yojana, which had been launched with fanfare in 2015. As you are all aware, there was a financial restructuring of the discoms where the debt was substantially taken over by the government, the state governments, and based on their performance enhancement, they were to get incentives. But ultimately, for performance enhancement, the organizations have to work hard, and with the government employees at the saddle, this was not expected, of course. So the Ujjwal, it remained only a financial package without commensurate management revamp, and therefore that has also failed. Telecom sector, we are all aware of its financially distress due to huge competitive forces, and we are aware of one, of course, the Vodafone and Idea combined, how it's facing. Construction sector, in fact, I am the resolution professional for two companies at this moment of time, and it's an sector with the best in the industry suffering today. And that is because of various reasons, including, of course, the income reduction of the people at large, the RERA, which of course did a good job, of course. The chief reason being absence of the investors, because investors, if they earn money from stock market, they would invest. And of course, the sentiment had to be good. The hospitality sector luckily was doing very well, but it has been hit hard by the lockdown. This will also face distress. Financial sector, which was in distress, has been hit further. The NBFCs were facing, a big headwinds due to IL&FS imbroglio, and subsequently, of course, the Devan Housing Finance have been, it is in distress. The agriculture sector, of course, though it was hit with the unseasonal rains, is expected to have a very impressive growth of 6.27%, but is being infected on the uptake side due to lockdown. Though, of course, sitting in this lockdown, we are able to buy certain provisions at a very competitive price. But the fact of life is that the direct sellers do not have wherewithal to sell so much of produce, which we are all aware of. Now, the distress in the various sectors of economy mean corporate and financial sector distress. And this is a double whammy, especially because the NPAs of the banks have still not tapered off despite the news to the contrary. If you see the chart below, and I have made it from the RBI website, I have not mentioned here the source, but the RBI website. These are the 5-year bar charts from financial year 2014 up to 2019. The leftmost, set of bar charts is the gross NPAs, which have steadily gone up from 1,940 crore in 2014 financial sector to 10,387 crore in financial year 2019. In the financial year 2020, also these have gone up. Now, how much the figures will come out, of course. There were further added during the financial year. However, there were some reductions because of some resolutions, etc. There were some write-offs, the technical write-offs, the final write-offs. Then at the end of the year, you had, of course, 9,365 crore of NPAs, and the net NPA, gross NPAs, and the net NPAs, if you see in the financial year 2019 ended, as against gross NPAs of 9,365 crore, you had net NPAs of 5,208 crore. This also needed to be provided for. Of course, there has been a bonanza in the form of recovery from Bhushan Steel, but that was already consumed. The SR Steel recovery would help definitely, but still there is a way to go. These net NPAs could go up further in the coming year. And we are all aware, even in the current year, in number of quarters, you know what Yes Bank has declared. If you add up these things, financial year 2020, which has just ended, the figures are yet to be out, would be quite adverse, and the financial year 2021 will be hit hard because of the continuing slowdown and of course the COVID. So what does it mean when we are now talking of the resolution? We are talking of the IBC. What does it mean? Are you able to hear me, all of you? Are you able to hear me?
Yes, sir, the sound is clear. Please go ahead.
Very good. Thank you very much. Right. Let me now continue.
Sir, we have stopped your video because there was some
Pardon?
audio clarity was not there. Now it is there. So you can continue.
And what is there?
Kindly continue, sir.
Okay, okay. So what I'm trying that the NPA conundrum is going to continue, and we have another bad news. The World Bank study, of course, this was way back in 2017. The recovery from NPAs in India have been very low, and this has been corroborated by the World Bank study, by the RBI's website as well. The year 2018 was good because of some cherry picking under IBC, but it's going to be low. What is the relevance of it? The relevance of it is twofold. One, there has to be a realization that there is a huge gap between the book values in the banks of their loans and the actual values which exist on the ground of the business as well as the assets for various reasons. I'll not go into that, but I'm definitely going to explain some case studies as we go along to tell you why it is so. So this has to be kept in mind during resolution, and the banks have to be very practical. And when you are advising your financial creditor, you will have to be very practical. You'll have to say that, look, you cannot expect that what's in your books is real. We have a big gap between what exists in the books of the banks, the loan books, and the resolution has to be made consistent with that. So coming back, when I talk of the NPAs, though the provisions have been made substantially, the net NPAs are very high, and the COVID-19 crisis will cause spurt in the NPAs. Let's assume that on the 3rd May, the lockdown is opened, but before the every business segment is resumed, it will be quite some time. And therefore, there will have to be an economic revival which will require multi-pronged approach. And speedy NPA resolution will have to be an important component of this economic revival. We have been notorious for extraordinarily slow NPA handling in this country. When RDDB-FI Act came in 1992, it came as a beacon. It operated well for a couple of years, then it languished. It's almost dead today. The legislation is also very defective despite many amendments, and it has all the ingredients for its, perpetual continuation. SURFACE had some great features, but SURFACE is hamstrung by the same adjudicating authority, which is a DRT. When the the borrower goes under section 17 to DRE, it goes on and on. He has no limit. He can catalyze any number of petitions with the NCLT, under DRT under section 17. But of course, when IBC came, it worked very impressively, but now there have been problems. So let us discuss all those things. Despite issues in IBC today, IBC is the only way forward because it's one of the most robust legislations, and it has got very active participants. Like IBBI is very active, its sole objective is to develop and make the whole profession and resolution effective. Now, can something be done as it was done in past? Because you must have read in the newspaper report that there is a clamor for extending a moratorium to the CIRP process for 6 months in the current scenario. Obviously, the companies feel that they are going to be defaulting in payments to the creditors, and the creditors under IBC do not have to wait for NPA to happen. They can move immediately, and therefore they want a 6 months moratorium. Probably some entities also are trying to push, the corporate debt restructurings and all those strategic debt restructurings, kind of those regulatory restructuring schemes which were tried in this country from 2001 to 2017 until they were withdrawn in February 2018. So a good 17 years of different schemes which were tried have failed, and they have failed very conclusively, although there is no admittance to this effect. So what's the way out? The way out is only IBC. As I said, there is a clamor from some entities to keep IBC in abeyance for 6 months to a year, and this must not be exceeded to. And this time has now come to resolve even MSME distress, because you have section 240A, which is an enabler for the MSME. Of course, the micro is a very difficult task, but certainly SME can be resolved under IBC. And I will share my thoughts on this in the coming slides, and we can discuss further what should be done and how we should be taking the matter up with the government and with the IBBI. Right. Now, if you look at IBC, which we are all aware, it is very time bound. But unfortunately, all these timelines, which are embedded in section 12, as you are aware, the section 12 of the IBC very clearly says that the CIRP must be finished in 180 days. If there is a justification for enhancement of the CRP period, it can be enhanced by 90 days with the approval of the COC, and of course with final approval of the adjudicating authority. But this can be further extended up to 330 days in case there is any exclusion period which becomes necessary because of some litigations. Of course, this 330 days again is not sacrosanct if you see some of the judgments from Supreme Court, but certainly within 270 days in the normal course, including 90 days extension, the resolution must be over and it must be presented to the adjudicating authority by the resolution professional under section 30 subsection 6 for the NCLT's approval under section 31 subsection 1. So 270 days, including the 90 days extension, is a very rigid timeline. Very few cases will be there where 330 days will be allowed or it will drag. But 270 days within that, it has to be given. But what happens? If a creditor files under section 7, 9 or 10, if it is approved within the first few weeks, if you look at the code, the act part of it, IBC, it should be over within days. It should be over maximum within 28 days. But it takes 6 months for its admittance. It has even taken 1 year in one case. Subsequently, after all these timelines are adhered to, if the resolution professional does file the resolution plan with the adjudicating authority for its approval under section 31 subsection 1, this also takes 6 months or even more. So the whole purpose of uh, uh, speedy resolution is substantially diluted. And what is the reason for this? Part of the reason for this CIRP delay is lack of domain expertise of the members of the adjudicating authority and their inability to go through the applications. Why they are unable to go through the applications? Because the load is very high. And this needs to be fixed by providing competent back office support to the NCLT's members. This is one thought, but I would also feel, in fact, you should always give a thought about it. Why should the application fee for filing under section 7 and to section 10 be range from just 2,000 rupees to 25,000 rupees? Let it be 2,000 rupees for a small figure. Let it be, linked. Let it be ad valorem. Let it be a percentage of the dues subject to a maximum. Why not? Why make it 25,000? Why not make it as 2.5 lakhs or 25 lakhs even? I am very sure the large borrowers would not mind paying 25 lakhs if they are sure of getting a resolution in time. Like in case of RDDBFI Act, the maximum stamp duty, of course, it's linked to the amount, but it's 1.5 lakh rupees. Had it been 10 times even, I would have paid gladly in most of my cases as MD of my past organization, ARC. But then this needs to be rectified by providing more number of benches, and there has to be a proper algorithm developed by the IBBI. It should not be reactive, but it should be proactive. There has to be timelines which should apply also to the adjudicating authority so that it can be done very fast. So what can be done further on this? Introduction of pre-packs with certain features which can be done. Before even pre-packs, I would talk of the fast track resolution, which is applicable under section 55 to 58. I have of course mentioned later in my presentation, which I'll come back, but no notification has come from the government in that regard, which is understandable, because as it is, the timelines are being very substantially breached by the adjudicating authorities for the constraints that the honorable members are facing. But in this background, obviously the government was not notified. So what can be done? Can something like a pre-packs be done? This can be done by adoption of transparent process, as in section 29 of IBC and CIRP regulation 36 and 36B, 36A and 36B, for identifying a buyer for the business prior to launching the CIRP. So who will do that? Now what happens is the CIRP is done by the resolution professional in the IRP who can himself become RP or any other IRP. This is done by the IRP RP combined, whereas pre-pack process can be done by the corporate debtor himself by seeking the help of the impaneled, the registered insolvency professional. Adoption of this transparent sale process must be geared to maximize business value and thus credit recovery. If it is not done, there will be a huge conflict of interest. So luckily we have section 29, which, requires that the RP will adopt the form and methodology as may be, advised by the board, IBBI. And the board has advised through regulation 36A and 36B. Of course, regulation 36 mentions the format of the information memorandum. PPACs has to be done. Information memorandum is not so relevant. Any party who can be invited, for whom a virtual data room can be opened who can do the job, and subsequently such bidders who can qualify under the section 29A filter must be eligible to participate, and therefore section 29A should be amended to permit promoters who get clean sheet after forensic audit and who are not willful defaulters or economic offenders. Today, of course, section 29A does allow participation in CRP by promoters, barring those MSME promoters for whom this does not apply in terms of section 240A, but others, non-MSME people, they can participate provided they clear the full overdues. Now, if they clear full overdues, you know, this is a bit incongruous, because if they were in a position to create full overdues, they would not have participated. They would not have, you know, come to this pass. Of course, a good thing which happened in case of SR was that since 29A applied, the serious bidder for SR did pay some 6,000 to 7,000 to the lenders. So it's a very good provision, but only in case of pre-packs, which meet the muster eventually, the promoters or the connected persons who pass the test of forensic audit and who are not willful defaulters or economic offenders must be allowed. Then why pre-pack? Why am I saying that? Because here what happens is, you're aware, whenever there is a distressed company, it may be NPA or it may not be NPA. The banks do get to the act much in advance before they take precipitate actions. Now, if they can very quickly figure out whether the company will get revived or not. If not, the banks themselves should catalyze pre-packs. Now, who is the best prime mover for the pre-packs? The banks have huge amount of database. They have the sectoral exposures. They have other banks with whom to discuss with. They can always catalyze pre-packs, because if pre-packs are there, the promoters may not have so much of a difficulty as they would have in case of the CI, you know, section 7, 9 or 10 triggering off. Besides, as I mentioned earlier, if the pre-packs are allowed for the promoters who pass that 2-point muster, they should be very happy to help the bankers to find. In fact, you know, 62%, over 60% of the pre-packs are sold to the connected parties in the UK, as I mentioned in the fourth bullet. These are very fast, and these have better survival rate which has been seen in the UK. Even in the US, these have enabled the firms to be restructured in a controlled manner. The only problem is a Phoenix syndrome, which means that somebody who has played mischief, taken the creditor's money, returns after a drama. So for this, we have a very efficient filter of section 29E, which is very crucial for India, which is famous for gaming, that is Jugaad. And if the promoter passes the muster of forensic audit, there may be more requirement. Of course, when we are talking about foreign pre-packs, I'm not saying that these are the only ways. There could be more ways. This needs to be open for, you know, discussion so that it can be adopted. And therefore, with these least turnaround time can be remedies for delays in CRP due to the adjudicating authorities' inability to approve the resolution plans. If you see today, why pre-pack again becomes relevant. If you see today, after introduction of section 12E, there have been number of withdrawals of the CIRP petitions, the admitted CIRP petitions. Second, this petitions under section 7, 9, 10, not 7, not 10, but 7 and 9 have been done uh, primarily to forge, one-time settlements. PPACs will be a little more than that. There is no harm if there is a one-time settlement, because ultimately, let's accept one fact that pre-PACs or any CIRP is primarily meant for maximizing the credit recovery. Now, when you maximize the business value, the credit recovery, I'm sorry, I find that my video was.
Hello. Sir, your voice is cracking.
Okay, let me just check.
Can you just check the internet connection?
Yeah, no, it's internet is showing full. Let me just check out again.
And also there are certain Q&As.
I find that you can, because the host has stopped it. Oh, right. Okay. Okay. Let me just try again. Just one moment. Let me just bring it near here. All right. Are you able to hear me better now?
Yeah.
I hope it should be better now.
Yes.
I'm not sure. So, all right. Now, so with least turnaround time, this can be a remedy for the adjudicating authority's inability to approve the resolution plan faster. Ultimately, of course, even these will have to go to the adjudicating authority, but it is expected that while these will not take time, since these are pre-PACs, these are in the nature of scheme of arrangement. But see, scheme of arrangement under section 230 have failed because there was always an escape route available. Although section 230 scheme of arrangement, without the phrase scheme of arrangement, is being proposed as a possible, liquidation process, alternative, it is unlikely to succeed. So that's what I am saying as far as the large and medium and large enterprises are concerned. But can pre-PACs be done, can be used to adopt for resolution of the SMEs? Micro is a very different ball game. Micro will have to be dependent on the direct entities. Let's see the figures first. If you look at the UK Sinhas Committee report, the MSME exposure was about 17.4 trillion rupees. That is 17.4 lakh crore. And if you add the individual borrowers, it could be even 30 trillion. We are all aware of their contributions. Here, of course, I have mentioned something which you can see. Now, the NPAs in MSME sector are supposed to be about 9%. This seems to be an understatement. This seems to be much more, because in the large enterprises, the NPAs have been much higher. Now, these have also resulted from the credit gap of around 26 trillion, of which 90% relates to micro and small enterprises. So NPAs in SME sector are because of two reasons. One, of course, the environment which we are facing today. And the second one is, of course, the credit gap. What can be done? Recently, of course, the Honorable Finance Minister has declared that up to March, 31st, 2019, their defaults, they will not be declared as NPAs. But the deleterious impact of lockdown will not be mitigated only by this. In fact, the lockdown has impacted the economy far more than the demonetization, because there was a business which was going on. Now they have stopped. And the fact is that after March 31st, what? How long can they wait? Because sooner or later they will be declared as NPAs if something radical is not done. And the declaration of any borrower as NPA destroys the business value irrespective of the intrinsic viability. It impacts the SME more than the large ones. Therefore, there will have to be something done, and pre-packs for distressed SMEs, apart from being faster, can be for acquisition and merger to ensure viable and optimum size of the entity post resolution. Now, what happens is that often SMEs, they are over leveraged, yet they need credit. They have, since they are over leveraged, they have size issues, the economic sizes are absent, but they need to be restructured, because if the business viability is intact, the resolving of any distressed entity is a mere function of the restructuring. It can be equity restructuring, it can be debt restructuring, it can be asset restructuring. In, of course, pre-packs, we could have all of these, some or all of these. Pre-packs may involve divesting of a division as a carve-out or as a demerger. In case of SMEs, this can be done by way of combining acquisitions. There needs to be another, facet of advisory to the clients, acquisition under IBC, because acquisitions under Companies Act have always happened for years, friendly or of course hostile acquisitions and merger thereafter, or mere acquisitions. But acquisitions are happening under IBC also. Whether merger happens or not is a different matter, but acquisitions are happening. In case of SMEs, based on my own experience, in fact, I was a promoter of an SME and I had exited myself because it was impossible for me to manage the things. So I had exited. It was a cardboard manufacturing, corrugated boxes manufacturing unit in Kutch, but I had exited in the year 2010. What I find is that if SMEs pre-pack is done alongside acquisition, it could help resolution tremendously. But as a part of MSME resolution, there has to be a regulatory intervention. RBI, towards this, I would suggest that RBI should revisit its guidelines on provision for diminution in the fair value of restructured advances. Now, what RBI wants the banks to do is to calculate the fair value of the debt, which is nothing but the debt repayment plus the interest repayments, and this whole cash flow is discounted at the bank, the existing prime rate. Compare it with what you are going to get as a result of the restructuring, and the difference has to be provided. Now, this is very theoretical. There's absolutely no need for this kind of an artificial provision. This induces the banks to quietly do some restructuring. One restructuring is done, then the second time it becomes only NPA. So this is what needs to be done in case of SME. If I were to conclude, one, I would reiterate, adopt IBC for distress resolution post COVID-19 lockdown. Shun the past regulatory schemes. They have not worked and they can never work. Make CIRP timelines mandatory for NCLTs and augment and strengthen the administration and cater to achieve this. Why the DRTs failed? Because, of course, both the legislations were very weak and there was no cadre developed, there was no institution developed. This should not be done with NCLTs. In fact, the NCLT growth is substantially faster, but it needs to leapfrog to impart speed, implement fast track resolutions under Part 2, Chapter 4 and Section 55 to 58 of the Insolvency and Bankruptcy Code. As I mentioned earlier, these sections are existing, but these sections, they stand notified, but unless the government notifies the industries under this, they can't be done. And obviously the government has not done any such thing because the existing CIRP itself is moving very slowly. Introduce pre-packs as a resolution mechanism under IBC for fastest resolutions. This can't be done just like that. There has to be a discussion paper circulated. In fact, there was some discussion earlier on also, but this has to be circulated. The good news is that with our experience of Section 29A, notwithstanding some, clamor for diluting it, this has worked very beautifully. Permit the present promoters to participate in the pre-pack resolution subject to clean sheet from forensic audit and with no record of willful default or any, economic violation. Creation of fiscal incentive for alternate investment funds, exclusively focusing on acquisitions under IBC, since the country does not have enough number of entities who can acquire distressed companies under IBC. Before I go further to the conclusions, I will share with you the two case studies which I had taken up during my one full day training program of the DGM and GM level of officers of one of the largest banks in Gurgaon on 24th of February. It was about a twin case study and one solo case study. The twin case study related to two power projects of capacity 1400 megawatts and 3960 megawatts. Both had been set up by known entities. The project, both were almost contemporaries with a gap of just about 1 year. The project cost of the two projects per megawatt was very different, very, the variance was very high. If you looked at just the power project cost, not the miscellaneous fixed asset, which could be very high. For example, if there is some mining along with the power project, it would be very high. Just the power project cost was very high. In case of one, in case of another, it was less. It was very high because the promoter had its EPC company, which has 86%, an engineering company which has 86% income from the EPC operations which they take up. So it had incentives to enhance the project cost, etc., etc. The banks had not really looked at the cost. They simply wanted to, shore up their, loan books. Now, if this were to go bust, what they would have recovered would have been less than half of it. But the other solo case study was a very different, interesting case where a 1320 megawatt power project was given a sanction by 15 banks. It went bust. It went into CIRP. The resolution professional admitted financial creditors amounting to 8,217 crore. The liquidation cost was very low. There was a solitary resolution applicant who proposed as against 8,217 crore of financial debt, just 1 crore of debt repayment by way of cash, conversion of the remaining 8,216 crore of debt into equity, that constituting 100% of the equity. Thereafter, reduction of this equity by 95%. So then 8,216 would reduce to just 51 lakhs, and thereafter something like 10.27 crore will be brought in by the resolution applicant to pick up the project. Obviously the banks rejected it, but the fact is that the banks may get more than this 1.51 crore, but may not get very significantly high amount. Now, the point here that I'm making, I earlier pointed out 13.7% recovery from uh, the NPAs in India as per bank study, Reserve Bank study. At one point of time, this figure was 10% as per RBI website. That figure is no more available now, so I could not update it. In our case, IBC has maximized recovery so far because of the cherry picking. Going forward, it's going to reduce. So you have to sensitize your financial creditors to be realistic, especially the banks who have been very generous in distributing money. In fact, the second case study, there were banks allowed 2,000 crore disbursement more than it was necessary as per the findings of the resolution professional, and there was a diversion of another 2,000 crore. So if this is the kind of monitoring which has happened from our bank side, recoveries are going to be very, very muted. So it's very important that we understand that our creditors will receive much less, and therefore fast track resolution or pre-pack can be done where such issues don't arise, where financial forensic audits lead to clean sheet. It can be indeed done. Adopt, another recommendation would be adopt IBC and fast track resolution also for the SMEs. And as a part of the resolution of SMEs, catalyze consolidation by permitting acquisition and merger of SMEs for sustained viability. There is no point. We have for the decades, studies after studies have been going on, but SMEs have remained hamstrung as usual. We have National Small Industries Corporation, which has special scheme for marketing assessment, working capital assessment, even preferred bidding by the SMEs, yet they have languished because they have been proprietary in nature. There has been a need for technology improvement. There have been, requirements for management, augmentation. Somehow the institutional mechanism has not helped. The clusters would have helped, but even clusters have failed because ILNFS had promoted about 4 clusters, and no wonder all have failed. By and large, the clusters have failed in this country. Probably now the private enterprise will have to come. There will have to be catalyzation of the consolidation of SMEs by permitting acquisition and merger of SMEs for sustained viability, and whichever incentives which are there with the previous entities in the matter of bidding for government supplies, etc., must continue. Obviously, when I'm suggesting pre-packs or even fast track resolutions for the large enterprises and SMEs, obviously these need to be introduced based on some discussion paper submitted, but there is no need for any discussion paper or any preparatory work for augmenting the capability of the NCLTs in terms of back office support, and also in terms of physical infrastructure and human infrastructure. Besides, while making the timelines um, mandatory even for the adjudicating authority, an incentive mechanism should be built in so that they are encouraged to move faster Finally, though I have not mentioned in the conclusions, there are famous PUFE transaction, preferential, undervalued, extortionate, and fraudulent under section 50, 45, 47, 49, 65, 66. Normally, PUFE are, related to uh, only section 43, 45, 50 and 66, but I've added section 49 and 65. These adjudications are independent of the CIRP in terms of section 26. So while CIRP does get over, no matter with substantial delay at some point of time, the PUFE transaction lead us nowhere. And if the justice is delayed, it encourages frauds. It's also important that we tell the government to ensure that section 26 of the IBC is modified, where even the PUFE transaction adjudication is done in a time-bound manner. Ladies and gentlemen, I got some complaint that sometimes my voice was breaking, but I hope you could indeed listen to me.
Sir,
I would now invite questions. Let me just see.
yeah. Sir, if you can see the Q&A box.
Yeah, I'll just do that. I'll just
There
do
are
that.
around 13 questions. If you can
I
just
just do that. Let me just come back to this. Let me just come back. Let me just how to,
Sir, your voice is breaking again.
okay, I'll just bring my thing closer. I have just brought it closer.
Or you could
Just one
probably stop
moment, just
sharing
one
screen.
moment.
It will save bandwidth for you.
Just one moment. Just one. First, I'm trying to get the, this, your internet connection is unstable. Just one moment.
If you want, we can read the questions for you.
You said screen sharing stop, you're saying?
Yeah.
I've done it. Yeah. All right. Yeah. Yeah.
Now
Please.
your voice is better.
Yeah. Better. Great. 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 Yeah. There are 15 Q&A. Whether proprietorship will be able to file an application under IBC. A proprietary firm can file as a creditor as an individual, but under section 10, the proprietorship firm it has not been notified. So far, the promoter, if he wants to file, he cannot file, but for recovery from another creditor, he can file. The second one is, in the absence of service contract, whether consultant able to file the application during COVID-19. What do you exactly mean? The consultant, see, right now, the decision will come on April 30th, whether, section 7, 9, 10 filings will be really deferred. But I'm not very clear what you mean by service contract. If there is enough documentary proof available to show that there is a credit and there is an acceptance of that credit, I don't see any problem, because the contracts can also be verbal. So yes, you have a difficulty, but it can be filed. An employee of company has left the organization June 12, where the NCLT application filed with the company based on March 2017 and registered in 2018. Can an RP appointed send letter to employee left in June 2012 for data and other details when director of the company, you mean say unavailable, or whether the employee is working as per direction of directors? What is your views? Now, section 19 very clearly says that if there is any employee which is not cooperating, it can be made to cooperate. But if somebody has left organization, he's not obliged to share data, but why should he not share? There is no legal, obligation for him to share data. All right. Any other whether every person facing, can you please expand what is meant by pre-packs? See, pre-packs is like coming up with, see, when you have a CIRP which is going on, the resolution plan emerges through competitive bidding. In pre-packs, what you're doing is that you are catalyzing competition beforehand and trying to get, even before filing, and you are simply going to the uh, adjudicating authority that here is a scheme which we want approval under the IBC, and any scheme implemented under IBC is binding on all, because any default can lead to liquidation under section 33. So for the sake of ensuring that it is absolutely binding, there is a, it can, IBC can be resorted to. Otherwise, you had those IBC, CDRs and SDRs and S4As. These were all kind of pre-packs. They were the regulator-driven pre-packs, but they have failed. Now it's very clear that unless there is a proper enforceability, pre-packs cannot be done. Second point, those pre-packs were not optimum because the promoters themselves were doing it. These pre-packs will be optimum because competition will be catalyzed. If a promoter comes up with pre-packs, it can be subjected to Swiss challenge method. So there is a way to, catalyzing competition and optimizing it even before going to the CIRP. Any other point? Let me just have a look. Let me have a look. Pre-packs I have explained. This is done.
There is a
I have explained this. Not understood the concept of pre-pack clearly. I think after what I have mentioned, it should be clear.
yeah.
Please do send me a message and I'll share with you some literature. It's a price literature also that I have. You won't be able to get through internet. I'll be sharing with you. I have it. But pre-packs have been working well in the UK, and UK, by the code has delivered 75% recovery to the creditors. So there is no reason going forward pre-pack this can be done. And finally, why this is a very important segment of the economic revival package, because if you don't put any asset to the most efficient usage, you are impacting economy very adversely, and this has gone on for decades and decades, and this can't be any more done. Any other point here? I have already this June 24 employee, June 2012 employee I have already mentioned. I didn't hammer that because the RP can approach him, but he is not obliged to help out. Any other thing? Okay. What individual can do against speedy justice, as generally judges only delay matters? This is a problem. This is what I am also facing in my PUF transaction, which I had filed in way back in 2018 February, where the fellow, after getting the petition, came running to pay this off. But then he hired an expensive senior advocate, and this dragged on and on. In fact, it should be so, if anybody who contests such petitions and is proven guilty, there should be deterrent penalty as well alongside recovery. That is very important. And as I mentioned, section 26 of IBC should be amended to make the PUFE transactions also time bound. As to other laws, we can't say anything because the other courts will keep on taking time. Hopefully things will improve as we go along. What is the opinion increase in the threshold amount of 1 lakh to 1 crore and whether it would affect the pending not admitted petitions? this 1 crore, if you really look at the petitions which have been filed, the average is very high, and if you see, even more will be very high. There are hardly petition with 1 crore. 1 lakh was too small an amount, and section 4 allowed its increase to 1 crore. I think it's been done. It's not too late. But this applies only for the CIRP under between section 33 and of course 31, between sections starting from section 6 to 31. For the unlimited liability companies, this will not apply. So this is perfectly in order. Now, it will not impact the admitted petitions, but definitely pending petitions cannot be taken. Most likely they will be impacted because of this. Can operational creditor file against cooperative factory? It is against any creditor, even government company can be filed. As far as I know, there is no bar on this. Is pre-pack private settlement out of court? No, pre-packs will not be out of court. It will be under the aegis of IBC, so it will be through NCLT. Next is 1 crore. Does it not defeat the purpose of for which NCLT and IBC was enacted? See, if you look at 1 crore amount, the cost of the resolution professional CIRP cost itself will exceed that amount. And if you know the IRPs, RPs cut corners, it will be still substantially more than half of it. So it's not a very good, economic proposition for anybody with such a small amount to file under CIRP. Such small creditors were filing only to catalyze OTS. So it has really not, destroyed the objective of the NCLT, but definitely it has impacted such small creditors. If you look at the statistics so far which have been admitted, this figure is much less. The percentage of such people who have filed or whose petitions have admitted, I do not have figures, but I understand it's very, very low. So it has impacted, but I would not say that it has defeated the purpose of IBC.
So there is a connected question.
Yeah.
That for defaults which have happened before March 2020, will the revised threshold be applicable?
See, this has already come in. It's already triggered in. So this will apply, obviously. It's immediate. Does it answer your question? Is that clear?
Yeah.
Yeah. Email ID is, I will request Rahul ji to share. Impact of monetary limit 1 crore by FM. We have already discussed this. Pre-pack is no, it's not out of court settlement. As I mentioned, pre-pack will be under the aegis of IBC and NCLT, and therefore it will be highly enforceable. Nobody can take it, for granted and easy as it was done in case of CI, CDR, etc. Post-COVID, there will be more operational creditors than financial creditors. There would be an issue with OC not able to move, NCLT and FC not being interested in pursuing debtors and they are not declared. And this will in future become NPAs. How could we resolve? I think if the numbers are too big, you have to approach the IBBI for some kind of relief, because this code is very unique, where the rules and the act can be amended only by the parliament, but the regulations can be amended by IBBI. IBBI also catalyzes amendment in rules and the act by interacting with the stakeholders. So as a stakeholders, If the OCs as a body, as a class, seems to suffer because of this, they can approach IBBI. I can only tell this much, and IBBI does act very swiftly.
Sir,
Is it mandatory to contribute by unsecured financial creditor to IR liquidation cost under IBC? Yes. CIRP and liquidation costs both, and both monies do reach him if money is realized. My contact number, etc., will be shared by Rahul ji. In UK regime, are prepacks part of code? Yes, there are some beautiful studies available. I will share with Rahul ji, who can share with you. You can
sir,
get in touch with me, no doubt.
sir, can we take certain live questions?
Yeah.
There are around 5 people who have raised their hands, so we'll take one by one.
Okay. Let me
Request Paras or Maitri to just.
yeah. Let me. Yeah. Yeah. Please carry on.
Hello.
Yeah.
This is, I'll allow a participant named Charan to speak.
Okay. Yes, Mr. Charan, tell me please.
Hi, good evening. This was very interesting to hear of the prepacks,
Yeah.
and certainly there are plenty of studies available, both in the international market and a couple of local papers. But again, as somebody who has actually worked in banking for a pretty long time, I see it actually raises a fundamental issue of moral hazard in the subject. If I know that there's going to be a
Yes.
prepack, I can very well pile on the debt, maybe inflate my assets, and then have a side deal. And as you yourself mentioned, most of the pre-packed deals happen with the connected parties. So how does the
Yeah.
law or what kind of a protection do you think we need to build in to avoid these kind of moral hazards in pre-packs?
Okay. We face moral hazard and also gaming. Gaming on the part of the borrowers and moral hazard on the part of banks, because nobody owns banks. These are the facts of life, right? So you have a point. This is a very valid point. Now, in the UK also, there are 60% plus, in fact, 62% of prepacks are done with the connected parties. My only answer to this is, like in case of CIRP, where section, CRP regulation 36A and 36B have been, introduced to catalyze competition, competitive bidding, though the word bidding is not used in the code. These have been done. Similar, process has to be introduced in case of prepacks. Now, yet, it's not a full answer, because even 36A and 36B can be gamed, in case of CIRP.
Correct.
And somebody can walk in. In fact, I may tell you that I did one buy-side advisory, and later I came to know that the fellow who walked away, it was a corporate debtor who had come to liquidation stage at that point of time, and there was nobody around. So my two friends brought this deal. I said, yes, it's doable. This fellow can file, and we worked day in and day out for 4 days and submitted a plan, and which was approved. And it was approved without any murmur by the NCLT. But only later I came to know that it came from the promoter's connected party. So see here, it's, accidental kind of a resolution which has happened. In favor of this, it was, it was not violation of 29A, but it was accidental violation, definitely. So there are problems. Therefore, there is a need for having a consultation discussion paper and then introduce. There have to be outside professional of great integrity. If we look at in India, even independent directors has been a joke. But then we have to, develop a kind of, independent professionals who can be members of such, screening, and who will get the best of the people for prepacks. Ultimately, prepacks can happen only if they lead to very substantial credit recovery, if there is a realistic valuation, and realistic valuation is very much within the control of the banks. they can do it. So there are proper processes and proper screening which will help this. That's the only way out. Otherwise, we are sufferers of moral hazard and gaming. Yeah.
We take the next
Any other?
question.
Yes, Sharon, anything else?
Now we will allow a participant name Anu Iyer.
Okay.
I've already allowed Mr. Rajesh Shirat. Can you please unmute him and let him ask the question first?
Just one moment. One moment. Where am I? What has happened here? One moment.
We are not able to see him.
Yeah, let me just check. Yeah.
I think he must have logged off or something. You can ask.
I'm very much there. My video is on.
Not you, sir. Not you, sir. The user who was supposed to ask question.
His mic is off, I think.
Mic is off.
Nah, yeah.
His mic is off.
No, I asked to unmute also. He's not doing it. So I think he's not aware. So let's move on to the next participant.
Yeah.
Yeah.
Hello.
Yes, please.
We will unmute the next participant, Anu Iyer.
Okay.
Hi, this is Anu Iyer, but I have not asked a question.
Yeah, please do.
Okay.
I have not asked.
No, you want to ask?
Okay.
Next question.
Yeah.
Okay, we'll go to Mr. Pramod Jain then.
Okay.
Mr. Pramod Jain. Can we unmute Mr. Pramod Jain?
He is already invited to unmute. I think even he must have just inadvertently raised his hand. So you could move on to the next participant.
Mr. Tarak Madani.
All of them are mute.
Yeah. Mr.
Srivastava.
Rajgopalana Srivastava.
Yeah, I'm there. Can
Yes,
you hear
yes.
me?
Yes.
Am I audible?
Yeah, carry on. Yes.
Oh.
Professor, this is Srivastava Rajgopal,
Yes.
one of your students.
Yes.
And an SME too. Okay. I have a question. Now, see, there are so many enforcement while renewing and extending credit to the, to the SMEs. Now, what happens is every time, even at the time of renewal, bankers are still not looking into related party transactions and things like that. In every case that we see, what actually happens is that the moment the credit is substained, it is silently, all the assets are silently siphoned off to sister concern to something like that. Debt remains on the parent sheet, balance sheet on the principal company, and all the good asset goes to the sister company. This has more or less become a time-tested model for companies to siphon off.
Yes.
This is, it works like, the 2 fight 3 dance formula for any movie. This is how this is happening. Now, why are banks not actually, funding and credit renewal?
Shall I answer?
Yes, Professor, please.
Yeah. See, what's happening is that this is a problem, definitely. Now, even this was a matter which came up during my one-day training for the banks in Gurgaon, GM and DGM levels. I told them that you stipulate a condition that you should have complete access to accounts during a certain period, right? You should see, unless the day book is seen, nobody will get to know anything about the status of accounts.
Correct.
Now the banks are shying away. They feel that if they ask, the good companies will run away. My point was always that if the good companies are there, they will not run away, in fact. This is the only way the banks can do it. Otherwise, the banks cannot monitor it. Second point is that the monitoring has to be so stringent, and for any violation should be backed by such a punishment that it becomes a deterrent. That's what it is. And therefore, given this fact, I said that anybody who passes the muster of forensic audit should qualify, even if it's a same promoter or related parties. Like you are yourself a promoter, you are a successful entrepreneur. When I subject your books to forensic audit, I don't expect that there will be any such kind. So fortunately, your company is not undergoing any distress. If it is, you are able to manage it yourself. But should you need any pre-packs, I don't think any bank will bat an eyelid before giving you the pre-pack. Gentlemen, this Mr. Sivatsa Rajgopalan is a very successful builder and entrepreneur in Tamil Nadu. Does it answer, Mr. Sivatsa? Well,
Yeah, Professor, it answered my question. Thank you.
Okay, pleasure talking to you. Yeah, next.
Thank you, Professor.
Thank you.
Sir, there are no further questions.
Perfectly. Okay.
And sir, thank you for taking out your valuable time. And
I'm sitting at home,
really
watching TV,
introducing
talking to you.
us to this novel concept of pre-packs and how way forward.
No, I'm sorry, it's not novel. It's a
for
tested
India.
one. But India, you need to work very hard to make it.
Even the IBC has come so late. So for India, it's a novel thing.